All right, all right. Good morning, good morning. It's 6:31. My name is Scott Rell, the Chief Strategic Officer at T3Live.com. Welcome to the 6:30 Club, where I give you some levels in the certain sectors, the SPYs, the Qs, the bios, the small caps, whatever it is, and I go over some keys to what I think the day is going to bring in. Obviously, everyone knows, guess what day it is? It's Wednesday. It's Hump Day, but it's actually CPI Day, right? Will it be less than feared? Will it be what everyone's thinking? Is it priced in? How will we react? I'm going to have multiple levels of different situations to respond fast and then let the market tell me what's next. That's what we do. We try and have multiple plans and we see which way the market wants to confirm it. But for right now, let me say what's up to some of my dogs around the world. We got Rocky Town ready to rock. All right. You think less than feared? Okay. We are kind of set up where people de-risk the last 2 days, and if it is less than feared, we can get some kind of bounce, but we'll see. What up, Texas? What up, Queens? Caracas, good to see you again. Nice and what's the word? Consistent. There you go. What's up, Ridgefield? What up, Atlanta? How you doing, Tequesta? We got B. Davidson in the house. We got Egypt in the house. Cheers to you this morning. Oh, I have a little repeat here. I got to turn the sound down. What up, Oyster Bay Cove? I grew up in Sasset. Ooh, hungry. Okay, how hungry are you? You're the Knicks fan, Tennessee? I don't know. Not a lot to be so optimistic about lately, but I hear you. My son's a Bulls fan. He's 13, and Zach LaVine just got himself a nice big contract, so that's good. Warsaw. So you know, my grandparents were in Warsaw right about a week before the Nazis came in. They left to go to Russia. They were put in a Russian Siberian work camp for 3 years when my dad was born. He literally fell out. They cut the umbilical cord with a knife, put him in an oven to keep him warm. And you think we feel like we have it so bad. And then they had to come back to Warsaw and see that every single one of their relatives were annihilated. So then they came to friggin' Brooklyn with 50 cents in their pocket on the boat. On the boat with 50 cents in their pocket. So, again, perspective is key. But good to see you from Warsaw. I like it. I like it. Anybody else? Anyone else want to say hello before we get to it? There you go. Everyone's waiting for the CPI data. So what you need to do is you need to put down levels in your head of what you think could happen once the information starts coming out at 8:30. So we're gonna go over that. I like this one little spot of the song though. Little Van Halen radio in the morning gets you going. Hopefully everyone has a little iced coffee. Maybe had a little breakfast. Maybe did a workout. I already did 500 reps in the sauna to wake myself up and think about how I could react around you because I'm pretty tactical right now. And then I think that everyone's kind of switching their thought process that, okay, yes, this could be the last hot CPI report because inflation most likely peaked. I'm in the inflation peak camp also, but then it'll be a little sticky and probably just meander its way down. Now we have to figure out how much did corporate America slow down, and what will earnings look like this in the next few weeks, starting with the bank earnings on Thursday, and will the reaction be positive or negative? Will stocks make lower lows? Will the S&P test 3638? A lot of this is going to happen probably within the next 2 to 4 weeks, so stay tuned. And if you're not prepared, then go to the beach and the mountains and don't lose money because you have to be prepared over the summer, just like you have to be during the fall, the winter, the spring. So anyway, here's the SPYs. So right now, the levels you should probably write down are pretty apparent. Okay. First of all, this is your lower wedge. Okay, so at least it's getting tighter. So when a pattern gets tighter, it's easier to use these points of references to trade off of. So from Monday's high, or actually Friday's high of 390.64, we pulled in about $11 on the SPYs, so about 100 handles. We put a low in at 379, which kind of matches this small little fledgling rally that we started back at 362. So you have a low, a higher low, another higher low, kind of getting tighter in here. So if for some reason the CPI is less than feared, okay, less than feared, not as hot, so it shows that the Fed's done a lot of its job. They're still going to go, 75 basis points, in a week or two, but at least maybe September, that could be closer to an end. Maybe the SPYs try and get above and stay above 386. Okay, then all of a sudden you have 390, which could be a later in the week story. If it's hotter than thought, or it comes in, then yeah, and they beat the futures down, then 379 is your key. Does it, does it hold 379 or get below and stay below? If it gets below and stays below, then you have 372.56 below. And then we'll see what's next. And then we'll see how long is it going to take to get back to there. So, I would think we're kind of set up that if it's in line, we get a reflex move, considering we just came in 11 points. But we'll see. At this point, no one seems to be in a rush to pay for anything higher. There's no leadership. Everything's in corrective mode. We're in a bear market. Energy sector is not special anymore. It's just a trade. Tesla, that used to be a leader where there was FOMO, is just a trade. Microsoft was down 10 and change yesterday. ServiceNow was showing you that, hey, maybe it's going to make lower lows. So when big name stocks look like they might make lower lows, kind of like AMD and NVIDIA did a week or so ago, or a month or so ago when Meta and Netflix, then market's still like, okay, we need to wait and let this stuff all work itself out. You go to the Qs, you want to look here. You also have a range where this was showing some relative strength for a little bit. If you look at the the Qs, it did break above this downtrend and hit 296, but now this looks more like a double top. But we'll see. This is a 284.62. You could write that down. This 288 is micro resistance in the middle of yesterday's candle, and then this is this is the last low we broke below on Monday, which was 291. So we'll see. Yesterday, you look at Microsoft, you're like, wow, still, can't hold up. If you look at the chart of Microsoft, it was holding in, looking tight, right? Microsoft was looking tight, looking like, hey, maybe there's a tradable pattern here, and then broke 262 fast, and now it's pretty damn close to the lows of the year. So they, some people said that the yesterday's move is over emotional, that they're not really having layoffs, it's just normal business. Either which way, if the longer now it stays below 262, the higher the probability that Microsoft is just not ready to to help the market. 4-for-1 split dividend coming, 200. Okay, we'll see. Apple's been a bright spot. Yesterday, Apple was making a weekly high while Microsoft was down $5-6. I'm like, there's some divergences here. What's going to pull what? So meanwhile, at the end of the day, it came off a little bit. So is this a little bit of a topping tail push through and failed? And was the market just trying to hide in Apple yesterday? Who knows? There's some news that Johnny Ives is now done. Mr. Ives was an icon at Apple. Apple's only up 16 cents, so I would look for Apple, to see if all of a sudden 143 breaks, 143.78, then this active sequence off the lows could be in jeopardy. Okay, I'm kind of avoiding it. And then you have Tesla. Tesla's just like, what up? You saw TrendSpider? Tesla has not been special for a long time. I love when Tesla's special. I love when you can be in Tesla, you can add to it, you can continue higher, you can take some off, you can stay with it. Kind of like what happened here in March. That was the last time Tesla had a really nice active sequence. That actually, did really well for me for the first quarter. That active sequence, which we look for. As an active trader, you look for active sequences, bullish and bearish, so you know what side of the market you kind of want to be on. Can you hold positions for 1 to 3 days, or 1 to 3 weeks, or 3 to 5 weeks long? In the last year or so, or 15 months, we've had a bunch of those, but then you've had more bearish active sequences where you need to be tactical, lots of cash, H-cell setups, picking spots, and that's the environment that we've been in. Okay, it hasn't been that many chart patterns out there that you could buy through a price point. It goes through sell some, hold some, just the way it is. But anyway, so ever since last quarter's earnings that were sold, and then it broke 973, it's been just a tactical trade. Okay, and now I guess let's fast forward and looking here, you have a bit of a channel. Okay, channel that's not that healthy on the active side, active bullish side either. Remember on Monday, I'm like, Elon called off the merger with Twitter, and the stock is only up $1. That's telling you the stock is weak, and the shorts might be a little bit more comfortable because now that the news is out of the way, there's no surprise reaction. So anyway, yesterday hit a low of what? Tesla hit a low of what is that? 685. So it held above 681, hit 685. Yesterday, but you know, on the alpha team, we made some money because it tried to bounce and got rejected into the lower third of this candle, so we made some money short, and then it played with this 700 pivot, so made some money there. So now, to me, this is getting a little testy. You know, if the S&P is going to make a new all-time low, not all-time low, sorry, the S&P is going to make a lower low. This, you look at the weekly chart, and this looks vulnerable. For today, where's Tesla? Let's see, pre-market. Pre-market Tesla is at up 229, so it's really nowhere. So it's a little bit above this 700, a little bit below 719. So we'll see how it reacts at 830 like everything else, and then Tesla's been pretty good to give yourself clues on what type of trading we have. And usually when it's lethargic and heavy, no one's in a risk to buy risk, because this is the poster child to risk. And then you go to the weekly chart, and I have to say, Tesla kind of looks like, you know, you could almost extrapolate this, if that's a word, where you have a bit of a bear flag, and the longer we stay below the 770, the higher the probability this gets broken, and we could probably see a move to 514, which would be the 200-day on the weekly. Some people are like, there's no way it could get to 514. I'm like, don't say there's no way something could do anything, because in this market, anything could happen. We've seen stocks get cut in half and then in half 3 more times, whether, you know, a PayPal or a UPST or any of those things. Even Amazon. Some people are like, Red Dog, what do you think on Amazon? Is the low end? I'm like, you know what? You don't know. This is the weekly chart of Amazon, right? I have a feeling the quarter is not going to be good. The question is, does it hold 101 or does it break 101 to see 8130, which is another big level post earnings? So that's what my question is in my head. Are recent lows going to hold, or are they going to, you know, go to lower lows and just really wash most people out? You know, and here's the 200-day. This is the 200-day on Amazon. So if Amazon was able to break the 200-day, come back, retest it, get rejected, and come back in, you know, why can't Tesla, which Elon's, you know, in a little bit in the crazy camp right now with the way he's been doing things, why can't this see 515? So just be careful, you know. But then again, that's how I've been doing things lately, going from the daily to the weekly, and then intraday I go to my 3 and 5 minute charts, because, you know, if I'm not carrying a huge bunch of positions, long or short, I need to be able to make money on a 3, 5, 15-minute basis, you know, and bring down my expectations during a market environment like this. So let's bring it back. Yesterday I was on TrendSpider with a lot of good traders, a lot of my friends, and some were saying, you know, what do you think about J.P. Morgan? I'm like, well, J.P. Morgan up at 169. I remember back in January, every single pundit out there on TV was like, you have to be in the banks, you have to be in the banks. Rising rates, it's the place to be. And then they had a shit quarter, gap down, never got filled, and from 169 it's gone all the way to 109, down like 35%. So some are like, how will you trade JP Morgan if you had to do something? Yeah, it could go lower. It could break 109. You know, I can show you the weekly chart. So if you know, JP Morgan is in line or better than feared, because there's been no IPOs, no real, you know, VC work, trading has been good, and they want the market to have some kind of bounce, then, you know, if you look here, 3 days ago this was at 115 and last week it was at 119. So if you want, you don't have to. Someone's like, what if you were to take, if you want some Bank of, you know, JP Morgan exposure, if you bought the 115s and sold the 119s and did a call spread, just a little call spread, it would cost you $1 to make 3. So if you want to do that way, I'm thinking about doing it for this Friday, just as an earnings play, because if just say you buy 10 for $1,000, you can make 3. If you bought 100 and risked 10 grand, you can make 30 grand. Or if it breaks and it's a horrendous quarter, you'll lose your premium paid, and then you get to buy it and trade it versus 109, or get out of the way, and all of a sudden you got to go to the weekly chart and say, wow, look at this gap right here. You know, it could be filled all the way down towards, you know, down to whatever this is. This is, wow, it's a gap right there. It's down to 105, like you just said. Very smart. GDP, yeah, the market could definitely go lower. Listen, I'm sitting in 2-3 positions, and I'm very tactical. I've only put 2 tiers of my wife's blood in the street account to work. You guys wanted to see what that looks like. Okay, I'll show you on the S&P. If you go to, you know, the weekly chart, I've already listed it, because some of you guys don't trade actively for a living and you're just trying to put some money to work. Well, now this head and shoulders top pattern which broke the neckline and retested and now has a lower wedge. So if the market wants to make lower lows, you have a wedge consolidation bear flag. It can break below 37.38 and do that. And then you have 35.11, 33.85, 32.09. So me, my 49-year-old, just normal dad, business guy, husband, long-term, trying to figure out life hat. I have 401k, put monthly flows every single month, S&P 500, just fine. My wife has a 403b, and then I have that one blood on the street account. I've only put it to work twice. A little bit of 38.10, and then a little bit of 36.40. So I put 2 tiers in. I have 2 tiers of cash. So just say you have $200,000 in a cash account. $100,000 is in the market from 17% off highs and 23% off highs. And I'm waiting to see if we make lower lows. I'll probably wait till about the 3,400 area. I'll put another tier, and then either when it starts working and it feels like the Fed will pivot back to no more sucking out liquidity or whatnot because they did their job stemming off inflation. Maybe I'll add to it on strength, or things really get ugly, and then 32.09, and then her account is back all in. I did the same thing here during the 2018 taper tantrum. I did the same thing here, and then once we make new highs, whether it's 2 years from now or 3 years from now, I put it back in cash and it sits on the side, and it's my patient blood on the street account, and then I have other long-term accounts that I'm allowed to contribute to. All right, so that's that. Lastly, I'm going to leave you yesterday. I also went over this little bio called Bluebird. All right, some guys like, I've seen this on your disclosure. Why do you have it? I'm like, well, I'm not going to go over all the particulars of the FDA looking to fast track or this or that. All I know is Bluebird. If you guys remember back in the day, this was just like everything else. Here it was 200 and change. Here it was 160 and change. Wouldn't you have liked to get out when the 8 and 21 day broke right there, or the 200 day 118? You could have got out of the way. Besides that, but anyway, that's where it is. They had us, some good news a few weeks ago, and it got sold because they needed to raise money. So they announced an at-the-money offering, and it's actually holding up really well as it's selling some shares to raise some money to help with their next trial. So this has a decent little pattern here. I am long some, not a lot. So I went over this with TrendSpider yesterday. So they wanted an idea, and it's been so hard to give them ideas with chart patterns. So I'm long tier 1. If it happens to trade really big volume and gets over 546, I'll probably add to it. And then 617 is your next point of reference. And ultimately, I don't see why this can't get to $8. And hopefully, in the next few days, they'll say they're at the money offering is done, no more supply. And then all of a sudden, the XBI, which has been acting better, continues, and you get a nice little trade here. But again, anything can happen with bios, and I hate bios, to be honest, because it's all about binary, news. I'd much rather, I trade actively for a living like Amazon and Google and Meta, and because there's not just like yay or nay with an FDA approval or whatnot. But anyway, this is a tight little pattern here. Someone saw my disclosure, said why are you in it? So just a little something to do. Yeah, exactly. Low size. You don't want to be taking 100,000 shares of this thing. Take 1 to 5,000 or whatever it is that you can handle, and then trade it based on the action. This is a nice looking chart. If it went below yesterday's low of just say 459, then you're out. So either which way, I went over it on TrendSpider with my friends over there. So I said, why not with the 630 club? So anyway, be prepared at 8:30. The CPI is going to come out. I gave you some of the levels in the SPYs. You have a lower wedge here. Some guys like Red Dog, every time we try and go up, we fail. We go up, we fail. I'm like, okay, if we're going to fail, it's just fine. That's a bear market that we're in. Got to get below and stay below 379 now. Okay, if we're going back to the lows of the SPYs or the S&P cash, we got to get below and stay below 379. Hasn't done it yet. So that's just the thought. If we're going to go back to 390 or 393, we got to get above and stay above 386. So simplify it and know what the expectations are. I think the expectations are like 9% and 5.6%. And then as far as crypto is concerned, I'm treading very, very lightly. Bitcoin, no one seems like it's in a rush to be buying it down here in this lower channel. Okay, this crypto and Bitcoin started its little bear market back in November. What do I mean? Well, right here when crypto broke 63.5, that was when I said I was going to 75% cash in all my crypto accounts, and they've done that multiple times, just like stock accounts. and then you've had a few different types of active sequences since. Okay, this one that failed right there at 43.5. Then at 37, you had to get out of the way, and now all of a sudden you had a low of 17.5 that bounced back to 22. But lo and behold, no one's really looks like it's in a rush here. So if this is going to be kind of like what happened here when it broke 29, watch this 18.6. It tried to go, hit 22.4, got rejected into resistance, and now it's right back into this support area. I'm in no rush, because if the S&P is going to make a new low on the year, I gotta believe you go to the weekly chart of Bitcoin, which you could also see. By the way, this is when I started my crypto life here. When it looked like an awesome opportunity when it took out 19.8. I wasn't in it back when all the little kids were buying Bitcoin at 500 or 1,000. I actually worked and used my technical prowess, which was really good, because look at that move before. Plays by a lot of rules here too. False breakout, get the hell out of the way, 63.5. Wedge, lower high, broke 37, and now if this is a bear flag, because it's losing its time to be able to bounce back towards the 8-day, chances are you're going to see 10 to 13.5, which probably means the S&P is breaking 36.38. So you got to correlate a lot of things in your head, so when things happen, you could execute with confidence. Now at 6:52, I got to mark about 40 charts for the Alpha team, which is who I trade with real time all day long, and then I write my note and I do a morning call for Regular All Access. Most people who are in my community, they'll like to hang out with me more than these 20 minutes. We spend the whole day today talking, trading, working on our process. We'd love for you to be part of that. A lot of you guys have come from the 630 Club into our community, and I love it. Like minds work together. Everyone in the Alpha team tries to help each other, point out levels. Everyone has little specialties in different sectors, whether it's the bios or energy or oil or data or this or that. I tend to be really focused on technicals, but at this point you can't just be a technician. You got to know a lot about the technicals and a little about a lot, because it's all on how the market reacts to whatever the narratives are. So with that being said, good luck today, fellas and ladies and kids and dogs. If you're a fairy, there are fairies out there now. There are people that actually identify themselves with animals. They're no longer a boy or a girl. Anyway, what a crazy world we live in.